Right.
So what can we expect to hit markets the hardest in the year ahead? Well, Saxo Bank has released its annual list of outrageous predictions for 2011. They feature 10 unlikely but potentially high-impact events that it considers to be worth considering. Well, they include the world's biggest tech company, Apple, buying Facebook. Here's another one. That kind of deal could help drive a second prediction, the S&P 500 hitting an all-time high. Let's stay with the U.S. Saxo Bank calls a dollar surge for 2011 a possibility. This as investors focus on troublesome issues in China, Japan, and the Eurozone. Now, Saxo Bank also says that the dollar index could climb by 25%. Another potential black swan event. Well, oil has already breached $90 a barrel to the end of this year, but could it climb steadily above $100 in 2011? And what are the chances of a slump back to $70 by this time next year? Well, Saxo Bank says gold's rally will continue. Its outrageous prediction, $1,800 an ounce. Well, John Hardy is Forex consultant at Saxo Bank, and he joins us now from Copenhagen with a bit of an explanation on these outrageous predictions. So let's start out with Apple buying Facebook. How do you figure that that is not beyond the realm of possibilities here?
Well, I think if you look at the situation with Apple, this is a company that's interested in not only selling fancy gadgets, but it's shown itself to be a very savvy on the digital media front and making these fancy gadgets unavoidable for the average person to have and distributing content. So now that it's got a very credible digital media content, social media is obviously the next realm it looks to conquer as it would certainly like to see social media distributed across its platforms as well. And the more it owns a portion of the most dominant force being Facebook, the more powerful it is in this area, and it helps its hardware side as well. So, and it certainly has the funds, you could say, a $300 billion company, a hoard of cash to make a credible offer for this company.
But would Zuckerberg sell?
That's certainly the big question. The question is also if the price is high enough, can he not sell? But we'll see certainly in 2011. Again, with the spirit of all these outrageous predictions, of course, is that to expand the debate, to consider what might be possible. These aren't forecasts. These are, debate creating, hopefully, ideas.
All right. Well, let's have a look at another one of your outrageous predictions then. These appear to contradict each other. You've got U.S. Congress blocking Bernanke's QE3. At the same time, you've got the S&P 500 reaching an all-time high.
Yeah, I think they're not necessarily contradict each other. If we have the idea that 2011 could be a year of extremes, we've built up quite a bit of momentum here in equity markets, and we could continue this into the new year. Let's say pension funds feel like they need to allocate more funds to equities as they're embarrassed by their underperformance. The private investor possibly also gets involved. The liquidity game continues for a while into the new year. This is possible to see equities, which we're not particularly bullish on for the full year, but to see kind of a blowout first part of the year before they fall back. Later in the year, I think it's interesting. We don't think the economy necessarily catches fire, and we really believe that the Fed's influence and its power has peaked somewhere here over the last couple of years. I think we're seeing Bernanke's charm offensive failing. We're seeing a very interesting threat from the Tea Party, especially led by Ron Paul, to make it an issue of the Fed's culpability in the past cycle and in the reason that the economy is not improving across all sectors. And what we're going to see, I think, is Bernanke increasingly in trouble as politicians in the U.S. sense that the Fed is as a viable political target.
Now, John, you've also got the dollar index rising to 25%. You say that's not beyond the realm of possibility here. Briefly, tell us why.
Yeah, I think if we look at the dollar, the focus has been on the Fed's quantitative easing and all the troubles structurally in the U.S. These are alarming, and we still have to consider the very long term for the dollar and whether its long-term trajectory is a failed reserve currency. But as well, any sort of solution to the Eurozone in the next year is going to require some sort of easing from the ECB. The Fed's easing, I think, has peaked, as we said, with the idea that Bernanke is going to increasingly come under fire, and the Fed as an institution So we're going to see the ECB having to do some sort of, and the EU having to do some sort of easing to address the sovereign debt crisis there. The Bank of Japan is going to be happy to continue easing to prevent the yen from strengthening further. Just those two currencies alone, the euro and the yen, are almost 70% of the dollar index. As well, we see an overheating in emerging markets and a big correction in risk appetite possibly from mid-year. And the dollar sort of funding as a funding currency for carry trades aimed at emerging market trades. Some of that could reverse at some point in the year. So I think it's a credible idea, maybe an outrageous prediction for 25%, but a credible and a possible scenario for the dollar.
John Hardy, thanks very much for giving us something to think about here.